Hello everyone, how's everyone doing? Hope everyone's having a good Tuesday. I was supposed to make this video on the night of May 5, but I was behind on schedule, so forgive me. Today we're going to be reviewing the price action of May 5. This is a part of the new series that I'm doing, 2025 market review series. I will be trying my best to review every single day of every single trading day, more exact, of 2025. That should be a long series. I hope that I am disciplined and consistent enough to stick to it and follow this through as long as I can. And the information should not be considered as an offer or enticement to buy, sell, or trade, as always. And here is the daily chart for the evening Nasdaq due to the contract. Here is the latest candle, 5. I have a few levels marked out that I want to leave a couple comments on. So firstly, this is the high. Here is the levels of this premium wick as it was reclaimed. It was turned into a discount wick, and price obviously uses the consequent enforcement level seen here. And here is the consequent enforcement of the balanced price range, which you might recall from the previous market review that I had. I said that this level must not be breached if we want to continue being bearish. Here we have this daily volume imbalance and ultimately the buy side liquidity, which I have as my personal draw liquidity. And the daily volume imbalance can just be a lower hanging fruit for price to reach in before it gathers the gunpowder to reach to the buy side liquidity. This week we have a federal funds rate on Wednesday, May 7th, and following that we have FOMC press conference. So it's important to know that the day where we have a open high-low close, the state where we expect price to move consistently higher, it's important to know that this does not mean that it's going to be plummeting until zero. It just means that we have a slight retracement in a case where we have multiple up close candles as we do here. It's normal to see a day where we close lower, but it's also smart to know that this could also mean that we might be rejecting off of a level that we expect the price to push through, and that's okay. These concepts, they work, but it's important to know that they are not 100% of the time. On the grand scheme of things, they work, but on a more micro level, as we have here, for example, with this consequent price range, it does not have to completely respect the idea that if we breach the consequent enforcement level, that means that we're going to push through it. It can very well reject lower off of that and continue to seek this low here and run discount levels. So a few comments about the day. Notice how price reached lower, touching the consequent enforcement of the premium wick turn discount here. And as we close within the bounds of the premium wick high, we had a small manipulation, which I will be counting out. This day is also combined with the Sunday 6 p.m. open. So Sunday 6 p.m. following to the 4 p.m., which is the final hour of the day. This candle here is 6 p.m. Sunday to 4 p.m. Monday. Moving into a more micro scale chart, a lower time frame, the 1 hour time frame. Here is the daily analysis. So if you recall, this is the consequent enforcement level of the wick that we had from this level here to this level here. That's Thursdays from previous week's wick. As price reached into the consequent balance price range, you see that we have complete rejection of that level, bringing us lower towards where Sunday opened, 6 p.m. right at the high. There's that level, leaving a gap above it. This price starts to trade lower from 7 p.m. towards, which is from here to 12 p.m. here. That's the range from 7 p.m. to 12 p.m. And usually what price likes to do is around this level, the range would be formed. And if price wants to continue moving higher in the morning session, London session would use the low of 7 p.m. 12 p.m. that range to soup the low and mislead retail traders towards the London session and gather liquidity. As you can see that we have above this high here, and above this high, and above this high. And this high here is an important high because of the fact that it was at the high of the accumulation or of the manipulation scheme that we had moving into the sweep of 7 p.m. 12 p.m. low. So as price reaches below that range low, we spend a lot of time at accumulating and gathering sell orders beneath this low, basically collecting breakout artists to short beneath this low, just to run it higher, following and kind of here. As you can see, we pushed through the main threshold of this order block here, which was once used to bring price lower. As we do that, we return back lower, touch the consequent approachment of this wick, which I have on the following slide. And then from there, we start to trade higher, and touch above the Sunday open, and also fill this small gap that we had formed the Sunday open. And from there, in the final 2 hours, we run back lower beneath that open, close within the boundaries of the premium high, and then that is where we close. Here is a more zoomed in version, and I'll be talking about this candle here and how we formed the breaker, taking this low, how this can be used for future anticipation. So firstly, before we move into the breaker, let's talk about this high here and significance. 7 p.m., which is from this high here to this low here, and 12 p.m. following. So here is 7 p.m., 8 p.m., 9 p.m. 9 p.m. established the low, 7 p.m. establishing the high. Their range is here. Notice how following that, the following candles until 12 p.m., which is right around here, have stayed in the range of 7 p.m. 12 a.m. low, or sorry, not the low, the 7 p.m. 12 a.m. range. Meaning that the low is obviously here. Now, notice as price runs away from this low as we approach 12 p.m., we establish a high here. Now, this high has pending buy orders above it. Obviously, people who want to buy above this high, this breakout to take towards higher prices, have their stops trade at this low. So this means that in the future, price return to this low would be triggering buy stops, following people who were brought into longs with the run of this high. As price started to run lower and take the 7 p.m. 12 a.m. low, now this entire run from this high to this low can be seen as a accumulation. Why an accumulation? Because it accumulated sell orders with the run of this low. So as price started to trade lower and lower and take it slow, the same idea that we have with the high here We also have pending sell orders beneath this level. The pending sell orders were triggered, and obviously we spent lots of time beneath this level. And then as price hit 9 p.m., we start to see that price wants to run higher and obviously take out the people that were reduced into early shorts this run low, putting this high as a weighted high, which means that it holds most of the sell stops, which is buy stop liquidity. So there, as price runs that, we establish a breaker with the low, high, lower low, and the lower low reaching into the more important and integral level, which is the consequent importance of the wick. Notice how prior to this lower low, price fails to touch the consequent encroachment, and then it uses London session and the sell side low here to kind of have a manipulation and true total sweep of the 7 p.m. 12 a.m. As we do that, the candle that we had here, with respect to the consequent encroachment, or sorry, the mean threshold, this order block, has now been disrespected. And this wick, which was held with the lower quadrant of, with this candle here that sent us lower, taking the 12 a.m. low and touching the consequent encroachment level, that wick here was overlapped, and notice this candle here reaches back lower, touches the lower range again, and then from there we trade higher, touching this on the open, and then that's how we create the breaker. Low, high, low, low, higher, high. Another point that I want to add is this price ran lower and touched the consequent encroachment first. Why did it take so much time to finally start moving? The obvious answer is time. Time, this range here, these couple of candles, these 4 candles, was time distortion. Price waited for time to align with it so we could start delivering higher. As we delivered higher, we created the breaker, low, high, low, low, higher, high. We have a breaker gap here. There's the volume imbalance. As you can see, price within the final hour closed through it, which tells me a little more about how you can expect price to trade in the future. Because if this breaker was going to hold or take price higher, back above the high that was created within the Enrico opening gap, this volume imbalance would have not been close through like this. Now, obviously, we still have this inversion here that is yet to be close to, but on time will tell. It's expected that if we do close beneath this inversion here, then price will continue to head lower and probably leave Sunday open, Sunday open high for a little more longer until we get the FOMC statement, where we will start to see that price would move opposite to how we did prior to the news release. I've seen this a lot with more especially FOMC days. Usually, the FOMC day, if market is expecting something significant from the news release, and that would play a big role in the price, it would usually see that the day of the news release would trade opposite of how the days prior to that traded. So if Monday, as it did, traded lower, and Tuesday trades lower, you can expect that Wednesday, May 7, FOMC news release would trade opposite to that. And this is just what you'd expect. Obviously, a lot of possible factors that once we get to that time, we will review and we'll talk about. But until now, that's what I expect. So that's generally the daily data. That's how the day traded. That's how the day was able to move. That's the range that we used for it to move. And now we will be moving into a more micro scale and the 1 minute chart. Now, before we do that, here is our new chart. This is going to be with more clear and easier to comprehend and identify annotations. It's the same arrays, it's the same levels, it's just clear to see. We have the bicycle highlighted, we have the consequent this wick highlighted. We have the order block wick drawn on, and we have the consequent approachment of the daily wick also drawn on. Everything is clear and it will be easier to recognize and see on the lower scale. Here is the 1 minute chart. Let's move from the beginning until the end. So 9 a.m. opened around this candle here. I'm pretty sure it was this candle. Yes, this candle exactly. Prior to that, we see that price used the daily consequent approachment of the wick to help us deliver higher and bring us to where we were. We also have these relative equal lows that were formed within the 9:30 hour, so that makes them more prominent. This price reached up, touched the premium wick high, see that it dumped lower, forming our first presented fair value gap. From there, we see the manipulation move that round lower took the relative equal lows that set in the morning session low. Notice that this also lines up with the set equilibrium low, so that gives us again a bound of how far beneath the relative equal lows can we reach the set equilibrium low. And then following that, we see that we have this wick here and the consequent approachment doesn't really get more perfect than that, stopping within the fourth quadrant. 1, 2, 3, 1, 2, third quadrant. Stop within the third quadrant, almost exactly at the consequent approachment level. From there, we return higher. We invert the first presented fair value gap, reach above that open, run lower again. Or sorry, we didn't reclaim the first presented fair value gap. We inversed it, and then we reclaimed it again. We hover in the order block wick consequent approachment level. See 1, 2, 3 stabs within there, and also touch this inversion gap. Notice after that we begin to trade higher. We reclaim the first presented fair value gap again, and then from there, oh, and sorry, I forgot to mention, 9:50 a.m. starts within the open of this candle, the one displaced beneath lower, and touched this block wick, and from there, at around 9:54, we started the buy program that delivered us efficiently towards the buy side liquidity that we had mentioned previously, and we commented about its prominence. From there, we rejected lower, switching back into the first value gap, and there we traded higher again, kind of stagnated around the level of the premium wick. You see how we presented it once at a time, and then we went to it again, touch back to the order block wick, consequent encouragement, also touch the high again, as we did before, and from there, inverse the gap again, accumulate at the consequent of the premium wick, and then start to accumulate at around the base. You see going above, lower, above, lower, above, lower, and then following that, we'll move into the next slide, moving into more of the afternoon session. Okay, so here is the PM session. This is following the move that we had traded above the buy side liquidity. You can see that we had pretty much just sideways price action, where up until we have PM session opening range, which is the 1:30 to 2 p.m. Eastern time. Notice how we have a gap here that held us and helped deliver towards the Sunday open and towards filling the gap that was created with Sunday open. This gap holds significance when it's dragged out in time. Notice how during the 3:15 to 3:45 Eastern time PM macro sensitive time, price uses this gap again to help plummet us and displace towards the buy side liquidity again. Following that, we see that after price went beneath the buy side liquidity, we reached up one more time, failed to reach back into this imbalance here, touch back into the SWIC, filling it completely, but failing to close above the consequent level. And then when we went beneath the Basabi Booty again, we didn't return to it, forming this closed candle, which showed us that we had a change in state of delivery. Went beneath midnight open, back above it, trade below it again, back up again. We have a mediation block. Price uses that again to trade lower. Notice how before that we move lower, touch the order block wick, look at the perfection. Look at how it touches exactly the consequent encroachment of the order block wick. That's how we know these are not random levels. And there, accumulate within the first point of the rally gap, or until price reaches lower, back into the order block wick. We touch into the 9:31 a.m. 1 minute candle discount rate consequent encroachment, and from there we get higher. We reclaim the first point of the rally gap and close within the parameters of the premium wick high, 2nd of April 2025. Thank you all for watching. I hope everyone enjoyed the video, and I hope you all learned something new. This day was pretty eventful. I was moving into this video planning for it to be a 5-minute or 10-minute video. It ended up being just less than 20 minutes. So, as always, Lord willing, be safe.